Welcome back, and today we are going to talk about Bitcoin, gold, and silver and crude oil. Today we are going to show you some coding, so that's why we are dressed properly. So let's go to the coding here. We made an update that Bitcoin was creating a pattern of a very deadly pattern around 18K, and it barely survived, and it started to push higher, higher, and higher. So Bitcoin is creating this rising wedge pattern that could means that soon it will be ready to go all the way back and lose all its gains should it fails this area, which is now being marked by the middle area of the Bollinger Band. So this rising wedge is very bad signal for Bitcoin because Bitcoin is failing to push above 24.7k in a daily basis. So who really was really the canary in the coal mine was, let me go here, you will see that the canary in the coal mine was crude oil, showing that all the inflation was cancelled, all the risk on trade was cancelled, and now you see that we are back in the crude oil prices to the beginning of the last year and very getting closer to the prices of the last quarter of last year. So crude oil really created a movement and then it went all the way back. If you see, that's very dangerous situation for crude oil. You see like it's like falling in a very dangerous channel here. You will see now that in the price of gold had a quick recovery but is failing and is suffering with the resistance, which is 1780, a big candle canceling the movement forward for gold. So if you check the price of silver, was creating the same movement, a recovery, a flag, and a recovery again, but silver is fighting the 21 level, which is a very level of full of karma for silver. Silver is failing to easily go beyond 21. If you go all the way back to the past, you will see more in weekly charts. Let's go all the way to the past here. You will see that silver was fighting the 21 level in 2016 and it was in 2013. Or if we keep going to the past, you will see that silver is not being able to go beyond the 21k easily. So this reminds me that multiple assets are failing to pass through the key resistance. Bitcoin 24.7, crude oil going all the way back, canceling the risk on game, and we also have gold failing the 1780 level. So what are the more news? Well, we have the this news by the big short Michael Burry canceling and selling his entire portfolio. That could be one of the means, and only leaving a shale stock. What is he expecting? More cows, more people in shale, more in shale. Is this related to 87 new IRS agents being hired by the Biden administration? Is it for hunting US citizens, for hunting money? What will happen in the United States? If you see that he's talking that we are half the crash, and they really started to look that way because we saw all the crude oil going all the way around and coming back fast and furious, going all the way down and canceling the whole 2022 inflation theory for crude oil. So nothing is happening for crude oil now, and we have Michael Burry, and it's a big surprise, a tiny surprise for all these crypto believers. We were coding, and I was coding. I saw as a gold analyst, I watching the cryptocurrency, the Bitcoin charts that is full of gaps. So I started to measure what happens if I trade the the gaps in the Bitcoin chart. So I was coding here, and I was doing some coding with MQI5. I'm still learning. So I measure and optimize to test what happens if I found that the open price of the 1 minute candle is 1.003 003 times the close price of the previous candle. So this is the trend. If I see that this candle in 1 minute candle in Bitcoin is 1.003 times the price of the close of the previous candle, you go buy, you go long, you sell. Let me check the rule. You sell close to the Bollinger Band, higher. Let me check the exit rule. Yes, you close the trade if you touch the high of the upper band in the Bollinger Band, so configured to the 20 days and 2 sigmas. That's the proof. So I close it there. Or this is the price, or the high of the candle of the previous bar is higher than the upper band, the Bollinger Band. That's the rule. 2 rules. A gap. The price is 1.003 higher than the previous close in the 1 minute chart for Bitcoin, and I exit if the high of the previous bar is higher than the upper band in the Bollinger Bands on 1 minute chart, or the bid price is higher than the upper band. That's the 2 rules for exit, 1 rule for entry. So I measure that, and it really makes sense, but I will text to you because I was coding how to trade Bitcoin for all the crypto funds and testing the gap, what happens with gaps. This is a long trade, and I optimize it and tested different optimizations. We'll test you live here for you, but I'll test you right here for you. Sorry. You will see that I'm testing only 2 years. That's it. Yeah, I want you to check the back testing, and you will see that the profit take total is 71%. I want to move here. These are the rules. You will see the results of the back testing are interesting. Just to let you know that you should pay attention. There are commissions. The big problem here with trading the gap in Bitcoin is that I'm testing a very tiny movement, so you will get eaten by commissions. That's a big problem. So let's go back. The most important thing is that this is a 71% profit trades strategy, and it really works quite well. But the amount of trade will give you are only 7 trades. So this is, you can't base that with 2 years. You only get this type of gaps in Bitcoin. So you pay attention to gaps because they are really important for trading to the upside, for being long or being short. So that's it. This is a quick update. Let me tell you what I'm seeing now for Bitcoin. Bitcoin is a wait and see, but it started to look bearish again for Bitcoin. You have 3 consecutive days going down. Crude oil is like canceling all the risk on game, and gold is also failing, but there is still hope for gold because we have the most important seasonal months, which are August and September, so there is still chance for gold and for silver. And silver should go. It's very interesting that silver is starting to get rejected in the 200 moving average area. That's very, very interesting because it's like saying, well, you have enough up to here. We also have Michael Burry canceling his entire portfolio. So maybe we have a bullish trap We don't know yet, but it's starting to look the three assets being aligned with more risk ahead. So you don't trade, you don't go long unless these assets go beyond their current resistance levels. That's it. Thank you very much. I hope you enjoy this update.